Everybody's working today, pounding nails, everything is good, but behind the scenes, we are witnessing this 10-year climb. We're watching mortgage rates climb, and these builders know they better sell these houses very, very fast because they know the storm is coming. An absolutely stunning day here in Rancho Mirage, California, about 84 degrees. And right behind me here, as you can see, a massive housing development. I think they're building about 1,100 homes here, roughly over 900 homes already built. It's a retirement community. And what I just find amazing is today we see the 10-year bond yield at 2.83, and the cost to borrow money, the cost to get a mortgage is continuing to soar. And I just look at the prices, I look at the construction, and right where I'm at right now, you're looking at homes that are ranging from about $550,000. That does not include the lot. I'm estimating the lots here are going to be around $200,000, so that's going to put you at about $750,000 just to get in here. Houses go up to $880 plus lot cost, so you're at about $1.1 million there. Then you got to think about upgrades. So you're looking at $750,000 at the bottom end, $1.1 million plus at the top end, and upgrades. And these houses range from 2,400 square feet up to around 2,800 square feet, I believe. So not too big, maybe around 3,000 square feet. Don't quote me at that. I know the minimum size is around 2,400. They might go up to about 3,000. I think it was 2,800. But you're gonna have HOAs here too. But take a look at what's going on here. I mean, look at it. And a majority of these homes have been sold. How many people are going to regret that they bought a home in the last year or 2 years, as now the 30-year fixed rate to buy a home is over 5% and climbing? Are we going to see 6% this summer? I have no doubt. Could we see 7%? Very, very possible. So we got a 50 basis point hike, Fed hike coming in May. We're going to have another one. They're talking 50 in June. What is this going to mean for housing? What does this mean for the big builders, the small builders? And, you know, I was talking to my buddy Marshall today, and one thing that people think is it's going to be different this time because, well, the banks have tightened up. Remember that most of these loans are Freddie and Fannie Mae loans, which makes up over 60% of all the loans in the US. And that's just putting 3% down. People don't have a whole lot of skin in the game. Freddie and Fannie loans make up over 60% of all US home loans. And that's 3% down, not 20. So a lot of people, for the most part, don't have a lot of skin in the game. And limits on Fannie and Freddie Mae loans is nearly $1 million here in California. And repeat, 62+% of all home loans are Freddie and Fannie Mae, where people just put down the bare minimum 3%. So not a lot of skin in the game. And the price of these homes, look, these are, I mean, they're nice homes, but we're talking $750,000 to well over $1 million. And I don't know, I don't see anything that really stands out to me. There's some finished ones over there. You're very, very close. I mean, literally could almost stick your hand out the window and shake your neighbor's hand. So this is what we're seeing out here. And I just wanted to bring you out to the job site here in Rancho Mirage and show you what people are paying. Comment down below, are they overpaying? Do you think that these home prices are going to continue to go up 10-20% a year with mortgage rates going up, with inflation going up? Do you think it continues to go up? I don't. I think that the Fed is about to put the brakes on this whole thing. I think this FOMO is going to be coming to an end, and I think a lot of people that bought these homes based on FOMO, the fear of missing out, based on all of the hoopla and all of the frenzy and excitement that you're never going to get back into these markets and you better buy now, and these all-time low rates. These people are going to really be upset when they begin to see the home prices like these homes begin to come down. When they paid $800,000, $900,000 for a house and they begin to go up for, you know, $600,000 or $700,000. And when this collapse happens and this crash happens, we've seen this movie before where homes like this were selling 50% off. You buy a home in here for $400,000, $500,000, not $750,000, not $1.1 million or $1.2 million. I mean, it's just absolutely insanity with what we're watching take place in this housing market. And everybody's working today, pounding nails, everything is good, but behind the scenes, we are witnessing this 10-year climb. We're watching mortgage rates climb, and these builders know they better sell these houses very, very fast because they know the storm is coming. So I'm going to continue just taking a little walk through here, but just to go over a little bit of news today. Federal Reserve Board member Christopher Waller sees likelihood of multiple half-point interest rate hikes ahead. Ladies and gentlemen, boys and girls, get ready for what is coming. Now they're talking multiple hikes, not just multiple hikes, but multiple 50 basis point hikes. What do you think that is going to do to this economy? What do you think that's going to do to the cost to borrow money? What do you think that does to the auto market? What do you think that is going to do to this whole thing? The cost to borrow money to buy a house, to get that 30-year mortgage. Wow. What's the breaking point, ladies and gentlemen? Is it 5.75% like UBS says? Is it 6.25%? Maybe it's 5.5%. I don't know, but I think we're going to find out shortly what the breaking point is on mortgage rates before it really, really begins to impact the housing market. Existing home sales, new home sales, we're getting very, very close to finding out what that number is. I mean, it's just nonstop out here. It reminds me so much of 2006 and 7, what we're witnessing right now. And they're still telling you everything's okay, still telling you that prices are going to explode, you better buy now. Still trying all the way to the very end to tell you that things are fine, that things are just going to continue to get more expensive. And even though we have record inflation, even though rates are going up, you better buy a house now because prices are just going to continue to go up. If you believe that, I have a bridge to sell you right here in the desert. Over the past 2 years, rents have exploded. And it's another reason why I believe this collapse is imminent. We look at Miami rent prices over the 2 years, they're up 58%, and they're averaging $3,000. Riverside, California, right here, the county I'm in, rent prices up 48.2%, on average $2,700. Las Vegas, rents are up 34.4% in the last 2 years. Phoenix up 29%. There's a breaking point, ladies and gentlemen, and I think we are there. Where does it break when people are paying $6 for a gallon of gas? They're paying $3,000 for a rinky-dink apartment. They're paying $1 million for a cookie cutter. I mean, this is absolutely so far out of control. I'm amazed. I'm thoroughly amazed that things have not already collapsed. But when they do, this thing is going to hit so hard, so violently, people are not going to know what hit them. U.S. retail sales growth, slowest in 13 months. Online spending plunged. Guess why? People don't have the free money. They don't have the discretionary money that they once did. It's going in the fuel tank. It's going in to the grocery store so they can put food on the plate, feed the kids. And we still have this illusion still going on today. This is going to end bad, ladies and gentlemen. We have never, ever seen things in such a twilight zone state of affairs as we're seeing right now. And I don't think that there's any going back. I don't think there's any way to fix this. Today on The Hedge, freight recession confirmed. Crashing truck sales show U.S. growth in jeopardy. So new car sales slowing, used car sales slowing. Now we have truck sales, commercial truck sales, freight trucks slowing down. They are down 23% from a year ago. So we have freight volume slowing, people buying less online, people buying less at the store, spending less on retail because they don't have the money. They're spending it on food, they're spending it on gas. So we're gonna see less buyers at the store, and we're gonna see less buyers for stuff like this. It's coming to an end, ladies and gentlemen, and a lot of you have seen your areas that look just like this, and I cannot tell you how much this reminds me of 2008 all over again, but this time it's so much different. Yes, the banks, they didn't make these exotic loans like they did before. It won't be as bad. 3% down on a majority of these homes, ladies and gentlemen. People don't have skin in the game, okay? 3%, that's all they have in most of these houses. It's gonna be a nightmare. The sales are coming. Amazon to hit sellers with 5% fuel and inflation fee. They are squeezing blood out of the turnip, ladies and gentlemen. They're trying to dig out money anywhere they can. So now you're gonna be priced even more to order something on Amazon, to order something online. An inflation fee, a fuel fee. They're gonna get you any way possible. Is this the sign of a recovering economy? Is this a sign that things are getting better? When people have less money, less discretionary spending going on, less opportunity, the wealth gap continues to get wider and wider, and we're told everything is okay. But if you have 3% to put down on one of these houses, you can move in. The question is, how long are you going to be able to keep it? And how long will people begin to realize that they overpaid? Could I be wrong? Yeah, I could be wrong. Will I be wrong? I don't think so. I don't think so. But what are these people going to do when these prices begin to plunge and they realize that they got duped and bamboozled and suckered into the FOMO? They got suckered into this frenzy by many of these real estate agents, many of these television shows, many of these economists telling them that this is the best time you could buy. We are in the biggest bubble in human history, in bonds, stock market, auto prices, luxury watch prices, and of course, real estate, the biggest one of them all. And this is where people are gonna lose. This is where people are really gonna lose their wealth. They have fake wealth. They believe because they bought a house a couple years ago for $500,000 and now it's worth $800,000 that they're wealthy. How fast this wealth is going to disappear and how quickly people are going to realize that they got suckered. Patience is a virtue. I've seen this movie play out before, and I'm going to watch it play out again, just like many of you. Many of you remember 2008. Many of you may not remember 2008. But if you don't remember 2008, you're going to watch a repeat. But this time, it's going to be much, much worse. You know, the sequel of the movie is never as good as the first one. It's much worse, right? It's always worse. Well, the sequel to this movie is going to be atrocious. So as I said earlier, a majority of these homes have already been sold, people living in them. But I think they're building another 150 and that's it. It'll be built out. And I just walked through here and it's a nice neighborhood, don't get me wrong. But 750 to 1.1 million, I don't know. I don't think it's that nice. But I think that there's going to be a lot of losers in this area. And this isn't to attack anybody or to judge anybody, but this just is an example of how so many people just bought in to the hype, and how many losers there's going to be throughout this country, and how many people right now still don't believe anything is wrong, still believe that they made a wise choice, a great investment. And I truly do believe they're going to be proven wrong. And you know who's going to win here are the people who come in and buy up the losses here. Some of these homes will go back to the bank. We're probably going to see some real carnage in a lot of these areas. And the money's running out as people are paying so much more at the pump, at the store, paying more for everything. And how many of these homes are second homes? That's going to be another problem. And you know what people do? They just call up the bank and say, here's the keys, I'm out. The winners are going to be the people that come in and buy these houses after people default and throw the keys back to the bank and tap out. Is that going to happen? There's no guarantee. I think we're going to see it happen at some point, not tomorrow. People will hang on as long as they can. There's a lot of denial out there, but at some point, people will realize that the RV's got to go, the extra car, the sand rail, the boat, the extra house, whatever. People are going to start getting rid of this stuff. The luxury watches, they're going to do whatever they have to do, sell whatever they have to do to keep their main house. And many of these are second homes and even investment properties. And if people aren't coming out here for VRBO and Airbnbs, a lot of these houses are sitting empty and not making an income, and then the investor gets into trouble. So it's going to be interesting. I want to just acknowledge quickly the video yesterday, if you haven't seen it, talking about my move out of California and why I'm leaving. And there are people out there that believe I'm not moving, and that's fine. You can believe whatever you would like to believe, but I have multiple reasons for leaving this state, and looking at bubbles like the one behind me is a solid reason to leave, because this state is pricing out so many people with taxation, property prices, gas prices, you name it. But one of the main factors of why I want to get out of here is the rising crime. And I watched a video, many of you probably already saw this video, I believe it happened yesterday, downtown LA, woman coming out of a jewelry store, and she's being followed by some criminals, and they jump in a car, follow her in a car, and she's running down the street, and they run her over in a car. She hits the ground in the middle of the street. This is broad daylight, early afternoon. She falls down, and they want her watch. They followed her out of the jewelry store, downtown LA, and she takes the watch off as soon as she hits the ground. I mean, she flies over the hood of the car, into the windshield, off the car, takes the watch off when she hits the ground, and just throws it. And I believe one of them had a weapon. Two of them, I believe, came out of the car, one with a weapon, grabbed the watch. They get back in. It was a Dodge Challenger. And they get back in the vehicle and take off. Broad daylight. This is happening daily. In fact, I think there were a couple more of these incidences yesterday in LA. And another story, the post office, the US Post Office, stopped service to Santa Monica neighborhood following attacks on mail couriers. Now, many of you know Santa Monica is an extremely wealthy area, multi-million-dollar homes all over Santa Monica. And now you can't even get mail delivery in some parts because postal workers are being attacked in one of the most luxurious neighborhoods in America. So another reason of why I am fleeing California, and I look forward to it. And I'm looking at a couple different states in the South. And it's interesting because people just say I've been talking about this for 10 years. Now, honestly, I've been talking about it for probably a good year, maybe 2 years, talking about it. But in the last year, I've gotten really serious about it. And I've had to, get things situated in order to make this happen. And I plan to get out there next month into the South and look at some ranches. And for some reason, I guess, people think that, I don't know what they think, that by me saying I'm moving, that I'm trying to get more views or whatever. I don't think I really need to tell people I'm moving out of state to get more views, but whatever you want to believe. Again, to people, stop worrying about me. I worry about you. Are you in a safe city? Are you in a good state? Are you trained? Do you have a skill set? Do you have food and water? Don't worry about me. And while I'm here in California, I promise you, I'm safe. I'm well trained. I have a skill set. I'm not too worried about it, but I just want to leave California. It's too expensive. It's too many criminals. And I just want to be on a ranch. That's just me. So I'll get there when I get there. And so again, to the people out there that are concerned, I will be moving Don't worry, I'll be safe. I'll be okay while I'm here. I can take care of myself. I'm a big boy. So anyways, getting back to this nightmare. This is what's happening, ladies and gentlemen. This is what's happening. And another 150 homes to be built, but it's amazing how much has already been sold in this development, and it just goes on and on and on like there's no stopping. So this is where they'll be building the last phase, looks like. I believe it's about another 149 houses. And this is where it will be. Look at the size of this thing. So about, I think, 1,200 homes total here. Over 1,000. And this development is about, I'm gonna say about 2 years old. So framing a house up over at the end of the street down there. You know, another reason for me leaving, and I really loved the desert when I first moved out here, but there's just so many people that have moved out here. It's gotten so big, so many casinos, so many giant music events, so much traffic. It's just so much congestion. When I lived in Orange County, I was so happy when I got out here many years ago to escape the rat race, to escape all the traffic and congestion and bad air. And now we're getting smog out here, and we're even getting humidity out here, and just so much traffic, and it's not the same place. And at some point, now we have the Disneyland project going up, which is just another bellwether to how crazy this thing has gotten, where they're going to be building 1,800 homes, a 455 room resort, a 26-acre lagoon, shopping, restaurants. It's just unbelievable. But this is how crazy it is getting. And this is when you know you've reached the Mecca, the top of the bubble, in my opinion. But it's another reason for me to leave, because sooner or later, you won't even see the desert out here. Everything will have a building on it, a casino, a theater, a commercial structure, a house. It's just being inundated with buildings and people. And last time, in the last crisis, when this happened, there were developments like this that sat like ghost towns for years. Just pads laying there, equipment laying around, just completely vacant, desolate for years. And they couldn't sell the remaining properties fast enough. The lots, 10 cents on the dollar for dirt. Banks came in and just had houses that were half done, pads sitting, vacant lots. You remember the disaster. Boy, this thing feels eerily ominous like 2007. That's when people told me it could never happen. Builders were telling me that they've got another 1,000 homes to build, another 500 here, 200. I'm building 10 houses over here. And they looked at you cross-eyed like you were nuts. And within 6 months, it was game over. And these were the same guys that had to sell the big 42-foot offshore boats, had to cut 50 of their employees, had to cut deals with the bank, many lost their businesses, lost their own homes. Really, really big disaster. And some of these builders were angry that they couldn't get the money that they wanted and that their whole life was going to change. If you're in this game, in construction, real estate, maybe you do titles, maybe you do mortgages, maybe you sell real estate, maybe you're a contractor, maybe you're a framer. I hope you're putting money away. Anything related to real estate and construction, on borrowed time. what's also interesting about this area that I'm walking on, I was told that this is on a fault zone. I haven't verified that, but I was told by somebody very knowledgeable in this area that this is on a fault zone. One thing I do know is it's in the wind zone, total wind tunnel. So you're gonna get a lot of 25, 35, 40 mile an hour wind through here. And again, many of these houses look identical. 2,400 to around 3,000 square feet, $750,000 to $1.1 million. That's what it will cost you with the inclusion of the land. $550 to $850 without the land. Of course, you got to buy the land. And I'm estimating it's going to be about $200,000 for a lot here. So I put you at $750 to $1.1 million. Plus, don't forget the upgrades. I don't know. Tell me, does this look like a place you'd want to spend nearly $1 million or even over $1 million? I don't know, not me. I'll see you on the ranch.